What's going on, everyone? I hope everyone had an amazing day. Obviously the market didn't though. So, the plays that we were swinging last night, they opened up at 35 to 40% each, which is a good thing. I also shared a watch list. So intraday, I didn't really share many plays. What I did was I basically just took these, puts as we crossed down below, and those worked out really, really well. If you went and took any of those plays to the downside, they worked out phenomenally. So in today's video, we're going to talk about what is going on right now. We're going to talk about what's happening with the SPY, the NASDAQ, the IWM, the 30-year bond, the crude oil, and of course the crypto market. So without further ado, let's get started with the video. All right, so number one, yesterday in my YouTube video, I was sharing that the 30-year bond was showing a little weakness. All right, so we're going to go over the 30-year bond, but basically I was hesitant to I also said, I'm hesitant to go really, really long. There could be short-term bullishness. I said that there was going to be short-term bullishness at the open this morning, which is basically what happened, which is why our calls opened up 35 to 40%. But then overall, I was saying that there was, weakness in the 30-year bond, and it can be translated into the markets. So basically, that's exactly what happened. Now, looking at the SPY, this was a pretty nasty close. So we failed at this level of resistance here at 473 once more, right? We closed below the 10 simple moving average, the 20 exponential moving average, the 468 fib level, the 50 simple moving average, and the 465 level. So now, to top it off, the MACD is still overbought. The MACD is still oversold, which should signify that it's bullish. All right, because when something, so say for example, the RSI was oversold on a company, right? If the RSI is oversold, it should mean that the stock should start bouncing, right? So with that same logic, the fact that we are oversold on this MACD, yet the price of the stock is still falling so dramatically like this, is not a good sign. Okay, it's bullish, or it's very bearish in the short term. So once more, it looks like the SPY is going to come and retest this 462.16 level. We're actually not holding any swings overnight for the first time this year. We could have easily went and bought shorts, right? Because I really, really do think that we are going to come back and retest this fib level right here, which is the 618% fib. So even if we were to go back and, retest this level, it's completely fine. But then we need to start showing some sort of support. If this 462.16 level is not held, then we are going to come back and break 462, then 460 needs to hold. And then if 460 does not hold, then we are going to retest the 457.31 level, which was retested multiple times back here. Okay. So, essentially, we can see the RSI is falling downwards, but the MACD is still moving upwards. So this disparity right here is also very bearish. So all in all, we're waiting for the market to show some more weakness so that we have a better buying opportunity. All right. So right now the SPY clearly looks very, very bearish in the short term. Now let's go ahead and take a look at crude oil. So here's crude oil. Crude oil failed exactly at the same resistance level. If this continues to fall, then we're going to come back and retest this $80 level, 80.50 level. It's not a good sign that the price is falling, yet the MACD is moving upwards while the RSI is moving downwards. So again, there's that discrepancy, which is not a bullish thing. Okay. So we need to see if crude oil can also hold these levels of support. Crude oil has been in a huge uptrend this entire time. So if we do end up, falling, we would have to come back and retest levels of support. We can, go short essentially on the break of this trend line as well. Below 81.33. If 81.33 breaks tomorrow, we can go short in the short term, and that would be a valid put opportunity on crude oil. So I do think that if we break down that level, then it can also help translate into the weakness of the SPY. Because if crude oil is also falling, essentially crude oil bouncing this heavy helped keep the SPY up. All right. So if crude oil starts breaking its uptrend and starts really dipping lower, then the SPY is not going to have a bullish portion of its weight to help hold it up. So that's also going to be very bearish for the SPY. So we have to, monitor crude oil as well. It doesn't look that great, and that also is not going to be very bullish for the SPY. That was a mouthful. I hope you guys understood what I meant by that. All right, so there's a SPY in crude oil. Now let's go ahead and take a look at the 10-year or the IWM. All right, so the IWM, the Russell. Russell, you got to get your stuff together soon. So you can see it bounced off of this trend line absolutely perfectly right here at the lows. That's fine, right? But it doesn't really mean anything because this can fall much more dramatically tomorrow, right? So right now, looking at this MACD, the MACD is still basically stagnant and it's moving upwards now. Yet the price of the IWM has been falling these past 2 days. So that is not a good sign. When the MACD is oversold like this, it should show extreme strength in the price movement of the actual stock. But the fact that the price is falling, yet the MACD is moving upwards, is not a good sign. Once more, imagine the RSI is oversold on a stock right here. Say, for example, the RSI is oversold, right? And the RSI starts moving upwards, but the price of the stock is moving downwards. That is basically very, very scary. So that's kind of what's happening right now. Not as dramatically, right? But that's the same concept. So right now, the IWM is falling. The RSI is also barely falling. So that's also not a really, really good sign because it shows that there's still tons more room to the downside on the RSI for the IWM. And the fact that this MACD is moving upwards while the price is moving downwards, that's also just very, very bad. So overall, I do think that we do fall lower. This 212.20 level is going to be very, very important. And then coming back here and holding these lows at 211 is going to be very, very important. If those two levels break, then we're going to come back and retest these lows from December 20th at 208.76. Personally, I wouldn't mind if the market really, really just dramatically fell because we are going to buy the crap out of the dips. Yeah, essentially, the IWM just does not look bullish at all currently, right? In the short term for tomorrow open, it just doesn't look bullish. There's no reason for me to have alerted any longs overnight. And yeah, essentially a lot of the put opportunities were day trades, and I also didn't really alert them on Twitter. I just shared the watch list. So overall, the IWM looks very, very bearish as well. So now let's go ahead and take a look at why I think like the main reason why we fell, which is the 30-year bonds weakness. And also before I continue with the video, I'm getting a lot of messages and everything, and people are comments or asking me questions and everything. I try to do my best to answer everybody, and if I'm very, very sorry for not getting to everybody as soon as you guys ask me questions. I'm not trying to be disrespectful. I'm just trying my best to answer everybody. So I really don't want you guys to think that I'm like ignoring you or anything like that. I'm just trying my best to, answer everybody, give like general answers to questions that like many people are asking instead of responding to people individually and everything. So also, I have like probably like 6 or 7 different other projects that I'm working on at the same time. So, like, I'm really sorry if I can't get to everybody. Like, I genuinely want to help everybody as much as I can. But, yeah, as the community grows, I'm not going to be able to respond to everybody as soon as you guys respond, as soon as you guys ask questions. So, I hope you guys are okay with that and still love me. All right, here's the 30-year bond, okay? And essentially, the 30-year bond is not showing as much strength as one would have liked, okay? Essentially, when a stock is extreme, so once again, I'm going to bring it back to the RSI, right? So the RSI was oversold here. When the RSI is very oversold, yet a stock is barely crossing above a major level of resistance, right? And it worked off of its oversold, and it's now, not oversold anymore, that means that a lot of the steam to the upside was wasted and it wasn't properly utilized. So this movement, yes, the 30-year bond had a bullish day today, but it did not cross above 157. So 157 is a major level of resistance. Basically, these lows right here are a major level of resistance on the 30-year bond. And once we reclaim this, that's going to be a much better opportunity for showing strength in the NASDAQ, which is the QQQ. So when the 30-year bond is bullish, the NASDAQ is also bullish. But the fact that the MACD was extremely oversold, but we barely bounced and we're barely even crossing above the 10 simple moving average, let alone getting anywhere near this level of resistance, is not a bullish sign. And that's why I think today was a heavy profit-taking day because of this weakness in the 30-year bond. When we started to bounce the first few days, that was a lot of strength being shown, right? But then once we crossed above and crossed over on the MACD, yet we didn't cross over this major level of resistance, investors, I think, took that as a warning signal in the short term. And that's why we had that sell-off today. So right now, I was also saying that there was weakness in the 30-year bond yesterday. So yes, on face value, the 30-year bond is up, I think, it's up 0.4% today. So on face value, yes, technically it had a green day, but it's not as bullish as it should have been. That's what I mean by the weakness in the 30-year bond yesterday. All right. So overall, the 30-year bond needs to cross above 157. I don't know if it even does that right now because, I hope it does. Hopefully it does, because once it crosses over 157, that would be a much safer opportunity to go longer on the NASDAQ. But this discrepancy right now, we had a huge green day in the 30-year bond, yet the NASDAQ and obviously the entire market had a huge red day. So obviously this does not really mean much, okay? And essentially, yeah, we just have to watch what happens to the 30-year bond, how it will continue working off of this overbought condition now on the MACD, which is not bullish. We wanted this to happen above 157. Okay, it would have been much more bullish if we crossed over on the MACD when the 30-year bond crossed above this level of resistance. But the fact that we're still below this major level of resistance is not bullish. Okay, so that is probably why a lot of investors took that as a warning signal, especially today. So, there's essentially my analysis on the 30-year bond. Now let's go ahead and take a look at the major tech stocks and then the NASDAQ, obviously. Apple, huge reversal, failed the 10 simple moving average, failed the 20 exponential moving average. The MACD is crossing, it's oversold, it's moving upwards, yet the price is moving down. So that is scary, similar to the SPY. All right, the RSI is also moving down, the MACD is moving up, yet the price is moving down. So automatically that is very, very bearish. All right, Microsoft. Damn. Oh my God. So this is not bullish because we closed, right below this major level of support at 305.65. The RSI is almost oversold now, which is good, right? It basically means that there could be another huge red day tomorrow. And ideally, what I want to see is the Microsoft to start becoming oversold on the Bollinger Bands as well. And then, I'll draw out essentially this level of support right here is very, very important. And then right here. So those two levels of support are going to be very important at 390 and 297.97. So ideally, what we want to see on Microsoft is it to really, really tumble, fall down to these levels of support, have the RSI oversold, and then, be very oversold on the Bollinger Bands as well. And then we'll buy that dip. So that would be a best case scenario, in my opinion, for Microsoft. Right now, this is not bullish in the short term because we closed below a major level of support and we closed below this January 10th low. So that is also not a bullish sign for Microsoft in the short term. You can also see the RSI is moving downwards. The MACD is stagnant. It hasn't started moving downwards yet. So that is also pretty frightening. This huge move to the downside on the on Microsoft did not cause this MACD to move downwards. So again, just that is not a bullish sign in the short term. So for Microsoft and Apple, now let's go ahead and take a look at Amazon. Amazon also broke below major levels of support. Look at this. It crossed above on the MACD. So imagine this is not bullish, okay? Because the MACD crossed above. So when the MACD is crossing above, like a crossover on the simple moving averages, for example, if the 50 simple moving average crossed above the 200 simple moving average, for example, right? That's supposed to be a very bullish sign. But the fact that we crossed above on the MACD, yet the price of Amazon is falling, that is very, very worrisome. Because that means that, there's still so much more room to the downside for Amazon's price to fall. Does that make sense? Because this is supposed to be one of the most bullish things for a stock. When the MACD is crossing above, that's supposed to be very, very good and bullish. But the fact that the opposite is happening is kind of frightening, right? So that's why I think that there's still more room to the downside on the tech stocks, and that would cause Amazon to become oversold on the MACD, oversold on the Bollinger Bands as well. And then, potentially we would come back down to this level of support that held before at, 31.27. The RSI, oh my God, bro. The RSI is not even oversold yet after a huge sell-off. It barely even started to move down. There's still so much more room to the downside. So this is not a bullish sign for Amazon either. That's cool. Google, same concept. We crossed above on the MACD, failed clearly at the 20 exponential moving average. We crossed down below the 10 simple moving average. Ideally, what I really, really want to see is I want us to retest this 200 simple moving average, maybe break down below, and then come back down to this 2660 level. By that point, the Google will also be oversold on the Bollinger Bands. Ideally, this RSI will at least fall down a bit more, hopefully. It's like the RSI is moving downwards, the MACD is moving upwards, yet the price of the stock is moving downwards. So again, like we've seen this over and over the last few stocks that I showed and on the SPY. So this, combination of things going on right now is not bullish. All right. So now let's tie it all together and show the NASDAQ. So the NASDAQ closed below, it failed at 389. First of all, failed at 389 once more. It closed below the 10 simple moving average. It closed below this major level of support here at 384.94. All right. It closed below. I also redrew the fib lines for this recent swing low and this swing high. So it closed below the 50%. It closed below the 38.2% fib at 384.36. And then it closed below this 378.61 level. So yes, so I know there's a ton of lines on the NASDAQ right now, but once more, just looking at the chart right now, this is not a bullish scenario. We can see that the MACD is moving upwards, the RSI is moving downwards, and the price of the stock is also moving downwards. All right, so this is essentially when we were trading at like 382. I tweeted, we can still fall down to 378, and we ended up closing below 378. So, we can still come back down and retest 375, 376. But now, ideally, what I really, really would love to see is if the NASDAQ can just become oversold on the RSI, if we can fall outside of the Bollinger Bands, the lower level of the Bollinger Bands, and come back down, retest maybe 370, 372, because I want to buy dips at very, very high quality, safe setups. That's really what I want to see, okay? And right now, for the past 2 years, every single good bullish opportunity was a very, very good, safe dip buying opportunity. So essentially, I want to continue doing that. When I don't see that happening, I don't force any trades. So right now, the MACD is moving upwards, yet the price is falling. That is not a bullish sign in the short term. If the price does decide to pop up tomorrow, so be it. But this was not a safe dip buying opportunity. What I want to see is more weakness into the NASDAQ tomorrow, hopefully breaking down below 375. And then ideally, really, falling. I want it to tumble. Like, I just want it to just really fall so we can start scaling into, calls. But overall, these puts and the day trades to the downside, I couldn't alert properly. But right now, they're, especially looking at the large tech stocks, there's still at least 1, maybe 2 days left of bearishness, according to their charts. So, yeah, I mean, I would just be very, very careful going long the NASDAQ until we come back and retest this 375 level, and then ideally the 373 level. So those are my 2 levels where I will start to, maybe not 375. Hopefully we fall down much aggressively below 375, but I think I will start scaling into calls around 372.50 to 373. I'll keep you guys updated on Twitter, of course. But overall, the entire market looks like it can still have some more down days. And this does not look the best case scenario. The best case scenario for the bulls would be a dip to this 200 simple moving average. We saw Google retest it. I want the NASDAQ to come down to this 200 simple moving average, and I will be on the fence about getting a mortgage on my house, because I might end up getting a mortgage on my house. I might sell it and buy this dip, because once we come here, like if we come down here and the market is very, very overextended to the downside, the move upward is going to be so amazing, man. I cannot even, I wish that happens. Like, I hope the market just gaps down tomorrow. Oh my God. But essentially just thinking about that makes me excited. But yeah, we don't live in fairy tale land. But yeah, 372.50 to 373 is probably where I'm going to start looking to buy some dips. I'll keep you guys updated on Twitter. But yeah, so there's my analysis on the overall stock market. Now let's go ahead and take a look at the crypto market. All right, so here's Bitcoin, and basically all of these trend lines, the fib levels that I drew out, worked out pretty well, right? We failed at these trend lines, and then we came back and fell and retested this level of support here at 42,333. So now, I didn't expect this to happen so quickly, but what might end up happening is we will fall down below 40,000. And the reason for that is because the MACD, very similar to what I was showing in the stock market. The MACD is very, very overbought, which signifies that there isn't much more room to the upside in terms of momentum. Yet the price of Bitcoin is falling. So usually when the MACD is moving upwards like this, the price of Bitcoin should also be moving upwards. But the fact that this is not happening and there is a discrepancy between the indicators and the price action, that is very bearish. Okay, so that's why I think that Bitcoin, regardless of what happens in the next few days, this MACD needs to cool off a bit. And as it cools off, I believe that Bitcoin is going to end up breaking down below 40,000 again. And then also the fact that this RSI is barely even falling down. This is not a good sign either. So overall, Bitcoin does not look bullish. This is basically textbook. This is literally what I drew out, and we ended up falling down here. And now I personally think that if this level breaks, and then if 41,500 breaks, we're definitely going to break down below 40,000. So there's that for Bitcoin. Let's go ahead and take a look at Ethereum. Oh man, so Ethereum, very, very perfectly. Definitely not keeping that. So Ethereum clearly failed at the same downtrend level that I was showing. So not only did it fail at this level of resistance, we're still very overbought on the MACD as well. And the RSI, similar to Bitcoin, is barely moving downwards, even though Ethereum's price is moving downwards. So overall, every single market looks very, very bearish. That's why I was staying very patient today. And all I did was just day trade some puts. And, just day trade intraday. I didn't alert any swings, nothing. Overall, I do think Ethereum if Bitcoin falls, obviously Ethereum is also going to fall, and then that would mean a very cheap and good opportunity to buy Ethereum dips. So yeah, essentially there's that for my analysis. I hope you guys enjoyed, you know, watching the video. I hope I help, and yeah, I will essentially that's really it. So I hope you guys enjoyed the video. I'll see you guys tomorrow. Thank you.